give a framework for sort of who our client is and what matters to our clients here at Clean Yield. And so they have sort of a multifaceted approach to what they hope is making an impact in a positive way on our society. So there's sort of three categories or three buckets or that they do this through. The box on the right called sustainable investing is basically their traditional stocks and bonds that go through different filters and the like to manage their portfolio that's aligned with their values. And then over on the left box is philanthropy, which is also a very important part of their portfolios. And obviously they're trying to use that to leverage change as well. Obviously the call today is focused on impact investing. That's the center box. And Roslie sort of, I think, gave you a great breakdown of sort of the asset class and product breakdown. And I would say that our clients work in all three spaces very actively, different degrees. In general, this center box, or the impact and community investing box, represents 1 to 2% of almost all of our client portfolios. And so it is something that is very much actively discussed from the day that a prospect walks in the door to becoming a client and engaging as a client. And I would say one of the exciting parts about this piece of the work with clients is that as the client becomes educated and learns more about this investing, it grows in size in their portfolios. And oddly enough, we spend, I jokingly say we spend 80% of our time talking about 2% of the portfolio and 20% of the time talking about the rest of the portfolio. As an independent firm, our job is to push the envelope as far as we can with regard to these investments. Roslie is absolutely right that there are challenges and different rules and regulations that can inhibit people engaging, but I think that it's our job as advisors to find ways to work with these challenges and make it happen. And we've been able to do it very successfully here at Clean Yield and have been doing this for 25 years and and still going. So I would say that it's too bad we couldn't have Rosalie's chart up beside ours, but I would say that the investments that our clients engage in the most are the direct loans to loan funds and community development banks, as well as the Calvert Foundation note. We do have a very active base in what she called direct loans or equities to investment companies, the private equity space in the community development venture capital. And you sort of have to break apart the top half, what she tagged as retail, as one sector in the bottom half that's for the accredited investor on the other half, because how you have to address it from a custodial and regulatory and accounting standpoint are very different. How we have no problem purchasing notes with loan funds and community banks, and obviously the Calvert Foundation note you can trade electronically. You do have to handle those investments differently in an administrative standpoint and reporting standpoint, because they aren't traded like like stocks and bonds in the Calvert Foundation note. So, you're doing a lot of paperwork. And what we do is we have an addendum to our contract when a client comes to us that sets it up from day one, giving permission to help facilitate these investments happening. And then as a result of that, we are able to manage the custodial relationship to handle the paperwork that has to go with that. So it totally can be done. Those instruments, for the most part, we're also able to price, and therefore, if you can price, you can charge a fee. We choose not to charge a fee on the loan fund notes because we figure that the clients are taking a hit on their return. Whoop! All of a sudden, I'm getting feedback from somebody. And so we have chosen that that's part of our engagement and commitment to community, is that we don't fee on those. The public equity portion and below, we also invest in. Those are more challenging from an administrative standpoint, but we can still do it. In those cases, it is very hard to value those investments. Those we put down as in what we call unsupervised assets, and often there isn't pricing that goes with that at all, because there are very strict rules as to the valuation factors for these types of investments. So once again, they are instruments that you can't fee on as well. And so, you have to make a conscious choice as to what it is that you're trying to accomplish in your work. I would say that from the client perspective, it makes our clients what we call very sticky. That they find that this is an added value to the work that they're doing with us as their advisor. We have 99% retention rate. Our clients, they kind of have to die to leave us. They really do stay with us, and it's because they really, even though this represents a smaller portion of their portfolio, they really, really value what it's doing for their communities and the impact that they can have with these dollars. I would say of the breadth of the investments, as I said before, the biggest bucket that our clients engage in first are usually investments in community loan funds, and you're going to hear about from New Jersey very shortly, and that's exactly the type of investment our clients start with. It's one that they can get their hands around. You're making an investment. It's a fixed income investment. You get interest, and you get your principal and interest back at maturity, or you roll it over for another term. It's very simple to understand, very basic. In the case of the current interest rate environment, it also is very appealing to many investors, and it's been very stable and very steady. I liken it to the tortoise versus the hare. Other than that, I think that I think you have to look at it as you're going to get a lot of feedback that says that this can't be done. I'm here to tell you that it can be done, and it can be done with, it's not completely smooth and easy from an advisor standpoint, but I think it isn't overburdensome either. I think you just have to have an attitude that this really matters and is of value. You should make sure that, if you're an advisor, that whatever program you put together, that you're consistent with that program, and that you have solid files tracking what you're doing and can show consistency in what you're doing. So with that, mine was short. I hand it back to you. In my, yep.
Thank you, Elizabeth. Just before I move over to Greg at New Jersey Community Capital, we're going to lose Elizabeth at the end of the call.
They're both really good questions and points. From our standpoint, it is part of an investment portfolio in our mind. So when a prospective client comes in, we talk about community investing as part of our investment strategy, just like you would talk about stocks and bonds. That it is talking about community investing because they're not as versed in that as they might be traditional stocks and bonds. So I look at it as, one of your jobs as an advisor is to get yourself up to speed so that you feel comfortable talking about these investments. Because if you have comfort and can speak to the investment, the client will. I have found that I haven't talked to a client without them stepping up and wanting to engage. And many times it's like, I've thought about this, but I just never knew there was a way I could do it. And that's why I said that, you don't start by going out and investing in private equity. You sort of go with very, what I call sort of the more less risky investments so that people can gain comfort and begin to understand the space more. And then your second question around the value proposition and the objective, I think that, obviously we're a firm that's very committed to this, but I would say that that we're all committed, right? If we don't have healthy communities and economic activity in our neighborhoods, we don't have much. And so I think that I may have mixed up that second question, but I think it behooves us to be out there and investing in local activity because it makes a more vibrant market all the way around, and clients value in engaging in things they can see and touch and understand. For many, it adds a breadth and depth and a connection with your client that you don't have when you're sitting talking about stocks and bonds that confuse many people. I don't know, did I answer your question the way you wanted? Did I miss a piece?
Yep. Yeah, I think it's a real answer, and it's based on experience. So we're getting a couple more questions, so I'm going to turn over to Greg Stankiewicz here at New Jersey Community Capital, because a big part of what the Community Investing Network really commits itself to is, with all the challenges, with all the questions, how do you cut through it and take action? So we're very pleased to have here in the state of New Jersey the only, full state community development financial institution. They cover the whole state of New Jersey. They're in many different communities. They're sort of like, one of the best kept secrets. A lot of communities that know about what they're involved with. So we're going to turn it over to Greg. He's going to introduce New Jersey Community Capital and even talk a little bit about a couple of new initiatives and a product in particular for people who do want to start to take that first step. So, Greg.
Thanks, and please let me know if you can hear me okay, or if there's any problems with hearing me. But my name is Greg Stankiewicz. I'm the COO here at New Jersey Community Capital, and we're very pleased to be here to represent, in Elizabeth's words, the voice of the tortoise. We have been here for 25 years. We're a homegrown New Jersey product. And we'd like to thank, first of all, Bruce, Elizabeth, Roslie, for all their work over the years in this space. And we'd like to give an example of the type of work that you can invest in if you invest in a CDFI loan fund, like both Roslie and Elizabeth were talking about. So with that, do you want me to click on it?
I can click on it, or
thanks.
you can
That'd
click
be
on
great.
it.
Okay, next one. So who we are. We're a 25-year-old nonprofit lender who provides loans and technical assistance to organizations, many of which are left out of the financial mainstream. And our job is to bring them back into the financial mainstream and to, basically fill gaps for mainstream institutions who won't lend to an organization. And as Bruce had said, we're the only CDFI that serves the entire state of New Jersey. Our mission is to transform at-risk communities through strategic investments of capital and knowledge, which sounds good, but I think a really good way of getting at what we do, and the next slide sort of shows you the business lines that we do work in, is just to give you a very brief example of one of our loans and the impact it can have. And so, for example, just one example, in 2007, we helped a community nonprofit organization here in New Jersey called United Vailsburg Services Organization. They were looking to establish the first early care center to serve the Ivy Hill neighborhood in Newark. We decided to help them. Not only did we offer a $2.5 million construction loan, we helped them bring the rest of the financing together in order to help create that first early care center. But we went further than that. We stayed with them, and we've been partnering with them for a long time. They're an incredibly strong and good organization. But in 2010, we were able to use a portion of our federal New Markets tax credit allocations to access that and help them use it for UVSO to repay and replace the original loan with a loan with a lower rate of interest. So that is, I think, a good example of the type of work we do. It's financing, it's technical assistance, but it also is patient capital, working with, in our case, over 100 nonprofit organizations throughout the state of New Jersey to help neighborhoods all around the state. And as you see, we listed some of our impact assessment data that we've done over, and we're very proud of this, over the last 25 years. Including, and on the second page, it shows that altogether we have over $200 million in total assets under management. And finally, our target populations highlight very, very quickly are two recent initiatives, both of which were announced in the last 2 weeks. The first one, announced actually last week, is the Restart program. We're very excited about the Restart program because it tackles an important problem for many of our communities, which is the mortgage foreclosure crisis. And we believe that this approach is a new model that can be used not just in Newark, where we're starting, and the surrounding area of Newark, but also hopefully to expand to other parts of New Jersey, and hopefully to be used as a model by other CDFIs and other community organizations throughout the country. And what this does is we were able to raise enough private capital through partners of ours, including Prudential Financial, MetLife, and Newport Capital Bancorp. We raised enough capital to be able to successfully bid on 150 distressed mortgage notes in the September HUD auction. By doing so, we won these notes, and we're now going to use that opportunity to work with the homeowners in these properties. And remember, a number of these properties are 2 to 4 units, so it's more than 150 families. And we're going to work with them and work with local nonprofit organizations to provide them financial education and counseling to be able to temporarily modify these mortgages and try to get it to a situation where we can stabilize them, bring them up from being underwater, bring the value of the mortgage down to the current market value, and then if after 1 or 2 years of seasoning in financial terms, turn them basically back into members of the financial mainstream and keep them in their homes. So this way we're going into the mortgage foreclosure spectrum earlier than most other efforts and initiatives have up till this point, to get at it before foreclosure happens. Keep the people in the homes where possible, but if we can't, or if these properties are already vacant, we'll then work to quickly bring these properties back to productive reuse, again, by working with community organizations on the ground. And we see this as an incredibly important new initiative, and we really see this as a way to show other CDFIs across the country a different way of bringing capital in to help both neighborhoods and the residents within that neighborhood. So the second initiative I just want to highlight very, very quickly to show the flexibility of an organization like a CDFI is our response to Hurricane Sandy and the impact it's had on our state. And Rebuild New Jersey is a program for small businesses who need working capital loans or lines of credit to quickly recover and rebuild from the impact they had from the hurricane. When we made these slides last week, you could see it was just for businesses located in Asbury Park, Newark, and Jersey City, and that was through, again, partners such as Goldman Sachs and JP Morgan Chase and Asbury Park UEZ, and the Jersey City Economic Development Corporation. But since then, we've been able to raise additional resources, and very soon we're going to officially launch a statewide loan fund here for small businesses throughout the state. So I urge anyone who knows of small business who could use this type of access to a quick, flexible loan to please contact us, and we'd be happy to talk with them. Our lending staff here is top-notch. And then, so these are just two examples of the type of work we're doing. When we talk about individuals investing in us, as well as our other financial partners, the way we do it is through a vehicle that's very much like a CD. We call it our version of a community investment note. And individuals who are interested can reach out to us directly. We have basically a note that's payable that has an interest rate of 1 to 4%.
Could I even add that,
depending on
you
the
know,
length of the
places
term,
like
and the
New
term goes from
Jersey
1 to
Community
5
Capital and
years or
other
even
loan
longer than
funds,
that.
it's
And
their
we're more than happy to
partnering and
talk to
linking
anyone
with
on
other
an individual basis who's
capital
interested in
that
investing
allows
in an
the
organization
projects to
doing
go
really good
forward
work
that
in their local
really
community.
create
And
opportunity.
that's what we think
And so,
is
you know, it's
so
their
exciting about the work we
connectedness
do.
on the ground
So with
that
that, I
helps
think
make the difference.
anyone who is interested,
So
I
it
urge
is
them
a
to
really
reach out
critical
to our manager
piece
of
of
resource
the
development.
access to capital
And
process
his
to
email
have
is
community
up on
loan
the
funds that
slide,
don't
and
get
he can
constrained
talk to
like
anyone about that as well.
banks and regulated
So thank
institutions
everyone,
do.
and I really appreciate it.
So sorry, I had to jump in because it's so key.
Really pleased to highlight New Jersey Community Capital as an example of the type of organization that can leverage community investments to help neighborhoods across the state. And I think it's really important in terms of these two new initiatives. So it's really addressing real problems, and then in a way that many times in the nonprofit sector we don't always hear about. We hear more about the direct kind of connection to maybe a program in a community, the fact that they're kind of behind the scenes with this capital, using it in some very creative, very business disciplined way is really exciting for the kind of impact they're having and will continue to have. So I just want
The what I call more the private equity side of things than the investments in loan funds.
This is Roslie, Elizabeth. And another really neat thing about community capital funds is they solve the access to investment problem for a community investor. All the things that you can't do, like
Stringent.
that, whether or not somebody
I think it's going to make it tougher.
Or have good systems for making a loan document, or all of those things. The community loan fund does for you, and I think it's also just a terrific option for many, many community investors.
Yeah, thank you. So we're going to move to the question portion. We have about 12 minutes, and I'm going to source these questions and try to find ones that I think reflect the majority of the group, and also before we lose Elizabeth. So there's one on here kind of technical about some pending legislation and limits on
what I suggest often when I get a question like that is
related to the Jobs Act that was passed earlier.
I mean, and I'm not trying to plug any
I've heard
set
of that as well, but haven't kept up on
entity, so I, if it sounds like that, that's not what I'm trying to do here. But the community investment note with Calvert Foundation is sort of the lowest hanging fruit and the easiest place to support community development financial institutions around the world, and it's a traded note. It has passed the compliance of most larger shops. That it is very easy to be able to add that to your repertoire without a lot of hoops and headaches. So, if you want to just start the conversation and be able to engage, it is a great tool. It doesn't get to the directed local engagement at the same way because it is an intermediary. So the money goes to the intermediary, meaning the foundation, and then gets through their vetting process, will get out to specific loan funds like New Jersey or Vermont or New Hampshire. And I think
is there something that you would
as that comfort starts to be gained, I think then turning to local community development banks is another good place. It is regulated. You have the insurance, the credit unions as well. Those are, that starts to step you into the fact that you can't transact those purchases on your platform like you can the Calvert Foundation note, and so that will begin the process of how do you work with your organization to figure out how to be able to do these types of purchases for clients and figure out how to administratively make that happen. And there will be more comfort because it is a regulated institution. And then I think after that, then, you know, I would say move to the community loan funds in your area so that you can, you know, have those institutions like, you know, in Vermont, we pretty much invest in our New England loan funds, and that way we can do the due diligence on those organizations and in most cases know who the management is and the like, and get those vetted and approved. And because there are custodial issues with those, a lot of times that means that the money, the client invests it themselves, so it doesn't show up as part of the portfolio. So that makes it a little more challenging, but that would be sort of the next step. And I could go on because then I would say, you know, we have a custodian that we work with that isn't our main custodian that we have worked with that helps, that takes all of these types of investments for us, but that's sort of, you know, much more sophisticated process and way down the road. So I hope that answers your question. And most of the loan funds, you know, do have, you know, the paperwork and the vehicle with which to allow your clients to invest, and you know, maybe it becomes your commitment for the year is to engage as many investors in the local loan fund as you can, recognizing that it is something that you'll facilitate but might not rest on your books.
Advisor that's interested can at least visit the USIF website, consider joining, and you just start getting in the loop of everything that's out there. And then, so that's a national step. And then locally, look up whether you have a local CDFI and start finding out what it does. I'm sure you'll be absolutely entranced.
Yeah. So it's great. There was also something we had talked about early on for people, to start to, advisors can do this. People who are interested in making investments is to start to come together in brown bag lunch forums and, ways that investor groups, not pitching any product, but opening up, like, Sandy, for example. How do you as an investor get involved in helping rebuild New Jersey? And so, there are products, there are organizations, some you'll do more officially the way we're talking about, but I don't want to leave off the reality that many people do have other more informal ways that they connect. And I know I have a lot of those people on the call. And so we're talking more about some of the formal, official mechanisms, just so we're all kind of on the same, starting with the same foundation. But there are clearly a lot of ways that are, off these platforms. But opening up the discussion, based on an issue or a particular area of the state is a way to trigger those kind of conversations. Before we break up as well, I want to, I think we're coming up to about 3 minutes. So we have a resource list that was just put up on the screen. Here is about 8 organizations and resources, including US CIF. The report that Roslie referenced is, you could click and access that. There's a money and impact investing directory from our colleagues at Talgra, which is excellent. Slow Money is on here, is kind of impact investing, food-related movement, and they've made some really interesting strides and have started some good kind of convenings around investing that we'll probably highlight on future calls, and a few other groups. I did want to ask one more question, because I know that we have some people on who are organizations looking to maybe access community loans. So if you're, let's say, a nonprofit who is looking to access this kind of money, I just wanted to maybe take a minute from our friends at New Jersey Community Capital just to tell us how you would go about positioning yourself for that kind of investment. Or
Sure, thanks, Bruce. I mean, basically, anyone who's out there who's interested, we usually say the best thing to do is to reach out to us directly. And again, our loan officers are really good at speaking with you to find out whether we can help, but even more importantly, even if we can't help, if there are other organizations who could help, or if there's a partnership. So we see that as part of raising the capacity of the state and the organizations within the state. So we welcome any sort of questions or inquiries, and we will look forward to working with anybody.
And something that I've also been familiar with is, part of the question you're going to ask yourself is looking at that mission connection. to see how well you align with that potential loan organization like a New Jersey Community Capital or other. And then from there you go through a pretty rigorous the financial health of your organization. And as Greg mentioned, it's a really important kind of discipline to go through, even if it doesn't at first result in money. It starts to really help your organization address the kind of things not only you need for accessing loan money, but also to strengthen, the health of your organization. So this process can serve a lot of functions. People asking if the slides are going to be available. Definitely, they come out, I think, within. Yeah, I'm going to hand this back over to Jerry, and I just want to leave off in terms of the Community Investing Network that, there are people from all over the state, and as I mentioned, people from all over the country and even the world on this call. Feel free to email some of the information, email your question if you are interested in establishing a local network. Right now it's only in New Jersey, but there's nothing stopping it from going to other places and building the same kind of community closer to home. So with that said, stay tuned for future webinars and convenings. We usually do them in person, but at this time of the year, this was more efficient. And thank you, and here's Jerry.
So I have an apology to make to everybody. We had a little technical difficulty and did not start recording until Elizabeth was on. So Rosalie is not on the phone at this point, but I'm going to ask Rosalie if at another point we can have her re-record her session, and then hopefully I can splice the two of them together or at least make them available in an AB version. We will get the PowerPoints to you as soon as possible along with that second half of the presentation. And I want to thank everybody, the panelists and Bruce, for organizing this. It was really interesting and terrific job on everybody's part, and I hope everybody has a happy holiday and a terrific new year. So without further ado, we're going to sign off.